the title is New Rules and New Realities. For the last 2 years, I've been at home doing Zoom meetings pretty much until the first of the year. I've been doing a lot on the road lately. I'm glad to be back. But my wife and I got a deal. We've been married 48 years now. She's a good cook, and I can't cook at all, but I can wash dishes really good. So we've got a joint venture going on, and that allows me for 30 minutes, because I can be kind of slow about it, I find myself turning my stereo up and play music for 30 or 40 minutes. And I became aware of this band called Imagine Dragons, and they have a song called Radioactive. And there's a few of you in the room that know that song, actually. But as I was listening to it, I thought, this is exactly my paraphrase of the U.S. economy right now. I want to just show you the lyric that caught my mind was, I'm waking up to ash and dust, I wipe my brow and I sweat my rust. This has nothing to do with COVID, okay? The stuff I'm going to be talking about has nothing to do with COVID. I'm talking about other things that matter to commercial real estate from every direction, whether it's building it, owning it, leasing it. I'm breathing in the chemicals, and then it takes a big deep breath. I'm waking up, I feel it in my bones, enough to make my system blow. Welcome to the new age. That's where investors live now. Why am I telling you this? Because you will be and are face to face with people that want to buy real estate, or people that want to sell real estate, and people that make the loans that feed the transaction. And what I want to share with you is what I see from them. They're relying on me too. I got a synergistic deal going on with the commercial real estate industry for so many years now. If I say anything that's remotely not even close to the truth, that almost never happens, but if I'm even close to not being right, there'll be somebody in a room just like this that's an expert on that topic, and after it's over, they'll come up to me and say, Mark, you got it 3/4 right. Let me tell you, there's more to it than that. And so I'm pretty confident about what I'm saying, not because I think I'm a genius, I'm not. I just pay attention. I get paid to follow this stuff day in and day out. I can't sing, I can't dance, go to a rock concert, start to do this. I'm off the beat. My wife says, Mark, stop it. You're not even on the beat. But what I can do is make spreadsheets and PowerPoint presentations. So if you ever want to have a spreadsheet party, invite me. I'll come and hang out with you for a while. This is the number one thing. If we had the top 100 people in commercial real estate from every place you can imagine in the United States, in this room right now, they wouldn't get this. Your buyers, your sellers, the investor community still think we live in a past time when the Federal Reserve didn't manipulate the bond market. Now, some of you, this is going to be kind of newer for you, so don't feel bad. If you're brand new to the business and you're only picking up half of what I say, I will count that as a failure because I love to communicate better. But just go with it, and I'm happy to field email questions too down the road. You email the questions back into the firm. I'll do what I can to clarify some of that too. I mean it sincerely. I love being a teacher. And I've been in the classroom at the university for 20 semesters over my career. And there's a lot of people in my classes that are brand new, and I think they're wonderful people, and I'm here to educate too. But the bottom line is, do you get the idea about how mortgage rates got down to 2.7%? How does that ever happen? I sold a house. I was in the real estate business. My first professional designation was SOB. I was the son of a broker. That was my dad, Dotson Realtors. And the last house I sold had a 15% mortgage on it. Can you imagine having a 15% mortgage on a house?
Yeah, I had one of those.
Yeah, some of you bought them, right. I felt bad about it until I cashed the commission check, and then I forgot all about it. That's a joke, by the way. I have a sense of humor. I do this so much, I have to have some fun along the way, just for me too. People say for an economist, you're kind of funny. What that means is you're not funny at all, but for an economist, you're like a real comedian. But the reason mortgage rates got down to 2.7 was because it's manipulated by the Federal Reserve. I hate to say it like that because you don't know me. A lot of you do not know me at all. You might say, well, you sound kind of like Fox News. I get it. I get it on this. But this is, everything I got in here, you can Google it and find out for yourself. If it sounds a little inflammatory, okay. I'm not a Republican or a Democrat. You were right. I feel like the Republican Party and the Democratic Party are the biggest blights on our economic future, okay? So I'm not a politician, but I analyze federal government policy on behalf of the people on both sides of transactions that you're working on. And they rely on me for that. Anyhow, why am I saying this? Because the bottom line is the Federal Reserve, I'm not going to get into too much detail on this for now, but the Federal Reserve of the United States of America has the power to make mortgage rates go up and down. And they've been doing it. 2008, some of you might have been selling houses. I follow the residential market just as close as commercial. Mortgage rates were 5%. And all of a sudden in 2009 and 10, they went to 3.75. How did that happen? The Federal Reserve made it happen. And then we have COVID come out. Federal Reserve got nervous, and the 30-year mortgage went from 3.75 to 2.7. How did that happen? Same reason. Next time around, when we have another recession, they will move that 30-year fixed rate mortgage from 2, I know it's up to 4 now, but it'll come back. We have another recession. What I'm talking about is 2, 3, 4 years when we have a recession again. That 30-year fixed rate mortgage will probably go down to 2%. And if they have to, they can drive it down to 0.5%. They have the power and the ability to make that happen. What does that mean? The good news is that the downside of asset prices is protected. What does that mean for commercial real estate? That means when somebody is talking to you, a client, a buyer, a seller, say, well, I don't know, boy, if we ever have a recession and these buildings, tenants start leaving, I'm not sure. I'm going to get a little worried about owning an office building or an industrial building. Those are people that don't understand how this works, because as soon as we get close to a recession, even into it at all, the Fed will lower interest rates down and cause asset bubbles again, just like we're seeing now. This slide right here is the base of the whole construction. I'm thinking about some Legos deal that's 4 foot high, and at the bottom, the foundation is about 1 foot wide, and it's way up 6 foot high. Way down at that foundation, below the fact that, well, we need job growth to fill up buildings, don't we? You sure do. But the flip side of that is, underneath all that, is you've got a federal Central Reserve Bank. It's not the federal government exactly, it's the the Federal Reserve Bank has total control over the cost of money. And they know that every time we get toward a recession, if they lower the cost of money even lower, it gets you out of it. Why am I saying this? Because you will find buyers in commercial real estate who will say, well, I'm not buying anymore at these prices. Yields are too low. I mean, I've been buying industrial buildings with a 6% cap rate for a long time, and now some of them are below 6, some of them are 5. Or I've been buying apartments with a 4.5 or 5% cap rate, and now I'm seeing them at 2.9. I'm not buying them anymore. They're as high as they've ever been. So one of the things, if you're new to the business, is your client says, I'm not sure, Mark, these apartment buildings are high as they've ever been. Never seen anything like it. Your answer will be, unashamedly, that's not your fault that this is here, right? You don't need to go, oh, well, maybe I can find you something. It's not. The answer is, you're right, Buckshot. They are higher than they've ever been because the Federal Reserve has lowered interest rates and jacked up the price of stocks and real estate to levels never seen before. and a whole bunch of older. There's a real hazard to being kind of old in commercial real estate. By that I mean in terms of the number of years you've been in the business, because you will say things. Trust me, most of my clients are not 49 years old. They've never heard of Imagine Dragons. Let's just put it that way. Okay, I hadn't either, to be fair. But those people aren't going to buy anything. Those people, just like me, you would make an A in my real estate economics class back in the day when I was in the classroom. You'll make an A in there, but you won't buy any property because you're worried about a big recession that's going to come, and you're not aware, or either you're not aware or you just can't accept it, that the Federal Reserve has got that manipulative power to make rates go even lower. So when I would talk to somebody, I was here in town a month ago. I talked to 250 of the biggest apartment investors probably in the country. And they're all going, yields are ridiculous. I'm selling everything in sight. So the older folks in the business are telling me, I'm selling everything that isn't nailed down. And I ask them, what does that mean? Well, that means that I have loans on that don't have prepayment penalties. If I can get out of them, I'm selling them. Because I'm not going to buy them for that price. I would never buy them for that price. The issue is there's all kinds of 40-year-olds and 35-year-olds coming out of school, and they're in charge of acquisitions for a pension fund, and the acquisitions team is telling them, we got a 15% allocation to commercial real estate, and we're at 7%. And that's your job, is to go out and buy real estate. And so that's why I'm kind of delving into this a little bit, because you're not going to hear this anywhere. I don't know why. Sometimes people will clap when I say certain kinds of things because it confirms things that they believe, but they never heard anybody talk about before. I tell people, don't clap, don't ask me to run for office. I hear that a lot too. When you're running for office, I tell people I'm not qualified to run for federal office because I pay my income taxes. I would like to run for office and then day trade right before we pass legislation. It's not working. Or the Federal Reserve, either one. I couldn't believe that the Federal Reserve actually trades stock too. It's like, are you kidding me? Really? Okay. Recessions in the United States, people in commercial real estate, and people in every business are always wanting to know from an economist, when's the next recession? Because what you don't want to do is start a brand new building counting on a bunch of job growth coming your way and have it not come your way. And so I have found, history shows that you have a recession about every 6 years. On average, it's about every 6 years. But average really doesn't mean much. Typically what a recession means is just you and me and your neighbors and mine have bought everything they want to buy and they don't want to buy anything else. How about a new car? You want to buy a new car, hon? Nah, I don't think so. I'm so sick of that new car smell. I don't want to smell it anymore. Kids got cell phones they need. We got TVs. We got everything we want. What are we going to buy this week? Nothing. That's when you have a recession. We're not even close to that right now because people have more money than I've ever seen in my life. I hear talk about a recession coming. I have friends that are trying their best to convince me we're going to have a recession. And I'm going to show you the facts. When we have big recessions, it's when our government makes a big mistake. Okay. And these are the two of the biggest. 1981. You don't need to do your history on this now, but at some point, your clients will appreciate it if you do. Professionalism in the business is everything. I mean, I'm going to tell you the same thing I just told that class at A&M the other night. It doesn't take very long to go from level 5 of knowledge to, out of 100, to go from a level 5 to a level 70. In a matter of 2 or 3 months. And what you learn after you get north of level 70, nobody ever gets to 90 or 95 or 100. What you need to know above level 70 is almost meaningless. It's just something that nobody talks about. What I want to encourage you all to do, if some of you are new into business and made a commitment to commercial real estate, you may feel like you don't know a whole lot. You can use this PowerPoint presentation as a roadmap of, I want to know more about that. I want to know more about that. I never heard of that. I don't even know what that guy was talking about right there, okay? You can use this as a roadmap, and like I was telling those students, if you view knowledge as a little silo that's coming up out of the ground, it's a circular cylinder, and right now it's at level 5 for you, whatever it is. If you would just allocate an hour a day to training like an Olympic athlete, think about somebody that runs that 100-meter dash. That man or woman has been training 6-8 hours a day for years. That's how you get to be that. I'm going to tell you that I don't normally say this out loud because you'll go, well, you got a long way to go, Buckshot. But I have felt mentally in my mind like I wanted to train for my career like an Olympic athlete for probably about the last 20 years. And it was that I remember is the day that my daughter got married. My youngest child got married. I got no purpose in life anymore. I'm no longer a managing parent. And I thought, what would happen if I trained like that Olympic sprinter in my career? And it doesn't take 8 hours a day. I'm telling you, if you just spent 1 hour a day, turn the stupid TV off, turn the Facebook off, it's called investing in human capital. That's an asset that no one can ever take away from you. You learned something. I just learned something yesterday. I didn't know. I'm investing in commercial real estate, and they come back with these K1 forms. And I've made some financial mistakes in how to report those to my own detriment. And boy, that hurts when you wake up and go, man, was I stupid? I didn't know how to deal with these K1s. I spent about 4 hours yesterday reading IRS tax guidelines on how to fill out K1s. So today, I know a lot about it. 2 days before that, I didn't know anything about it. So I had a silo that wasn't even above the ground, and I raised it up far enough to get what I needed to know in a day, in 4 hours. So all I'm trying to do is encourage you, if you feel like out of 12 silos that might be useful to you to become a really reliable commercial real estate professional, every one of those silos, you can lift them up, I'll bet you, with 12 hours worth of work. 12 days, 1 hour a day. You just do one and you do another, and then what gets really exciting is all of a sudden you feel like you've got an individual silo here, another one here, another one here, and another one here, and all of a sudden they start blending together, and you see how it all fits together. And instead of having 5 individual silos that are 3 feet tall, you have one silo that's 4 feet in diameter, and it's 3 feet tall, and it all fits together, and it all makes sense. And man, that gives me confidence to show up and talk to people. My audience are just like you. My audience is the top of the food chain wherever I go. So when I walk in a room, I feel like I better be on my game because I'm talking to people that are on their game. But I have the confidence to do that just because I've done the homework. I'm not a genius. I don't have a huge IQ, but the 1981 tax reform, the government tried a neat social experiment, found out it was a bad idea, and in 1986, they rescinded the tax benefits, and the value of commercial real estate fell 40% in 1 year. And the savings and loan industry, some of you never heard of it. It disappeared. It wiped it out. Minus 40% for all commercial real estate. You will be talking to customers that own property back then, or you'll be talking to customers that came in after that happened in 1987, 88, 89 and bought property for 60 cents on the dollar, and they've been wealthier than you can dream ever since that happened. It's good for you. You don't need to know all the details of that, but it's good for you to know a slight bit about what happened in 81 and then in 86. It's not that big a deal. It's not rocket science. You'll understand what it is. So your client goes, well, this feels a lot like 86 to me. I'm just waiting for that minus 40 because prices are high.
What were the interest rates in 81? 18 to 20%.
Well, yeah, the interest rates, I was still selling houses.
12 to 15.
Yeah, 15%.
Negative AM mortgage.
Yeah.
Funny money.
So
My
that
first
was a
house.
gigantic blowout in commercial real estate. And that's in the memory of people. The other one was 2005 when we tried a different social experiment. Wouldn't that be fun if everybody in America could buy a house? Let's do that. Let's do that.
Yeah.
And so we allowed people to buy homes with a what loan to value ratio? 107%. That means you buy a $100,000 home and they loan you 107. And they don't verify your credit and see if you have a job. There was no due diligence. And you could do that 100 times if you wanted to. And people did. And all of a sudden, the adjustable rate mortgage that was down here went up, and nobody could afford them, and they all foreclosed all at the same time. And houses in a lot of places in Florida and Las Vegas and Phoenix dropped by 30 or 40%. So you've got clients out there that are remembering that too, and they'll go, this feels an awful lot like 2008. So you got different customers out there saying, this feels a lot like 86, or this feels a lot like 2008. It's not like either one of them. But this is going back to Imagine Dragons. I'm breathing in the chemicals, I can feel it in my bones. These are the chemicals, and well, I guess some of them are kind of related to COVID in a certain kind of way. Our government right now has printed so much money and given it away. The American people have enormous sums of money in their bank in cash, okay? And so this is, in my mind, leading to pent-up demand like we're not gonna believe. I'm gonna talk about that in a minute. We're defunding the oil and gas industry. This started before Joe Biden came to office. This isn't a Republican or Democrat deal. Wall Street cut off the funding to the oil and gas business in 2019, and if you that live in Houston know exactly what I'm talking about. You're going, what's going on here, man? It feels like we're getting into a recession. Well, what happened was Wall Street said, we're not loaning you any money anymore. And so this is a bad thing because we're not going to all be driving battery-operated vehicles next year. And so when everybody goes on a vacation this summer, there's not enough oil being produced out of the ground. And when everybody decides it's time to go, COVID's over, let's go visit, let's go travel, business and all that. I thought oil could easily be $100 last year, and I think it could easily be $125 this year. And that was before what's happening in Russia right now. We've got a labor shortage. It's amazing. I don't even need to belabor that. I don't care where you go. There's a sign up that says, I need help. Help wanted. And when you start asking, see, this is what I do. I tell people I'm an economist. Can I ask you a question about your business? And they'll take pity on me and go, sure, what do you got? I'll say, how's the labor situation in your shop here? I went to my doctor, a new doctor, and I said, how's the labor shortage with you? Is it impacting you at all? And the doctor up in College Station said, well, normally I have 13 people working in this clinic every day. Last Thursday I had 5. And I said, were you on the verge of having to shut the doors? And he goes, yeah, I was. And I said, and he goes, in addition to that, today, while you're here, I have 8. And most all of them are temporary workers. So Mark, basically, it's you and me. So I'm thinking, I'm not going to schedule any elective surgeries right now because whoever might be helping in there might have just come off the oil field or Uber jobs. Like, hey, get over here and close this guy, all right? It's like, yeah, just a minute, let me get this order from Taco Bell over to the... I got good news for Texas in general and Houston too. China is in a secular decline. I'm going to get into this in a big way. This is going to be really strong for the Port of Houston, and I'll talk about that in more detail. Working from home, as we said here today, you got clients that want to buy or sell office buildings. None of them know how much they're really worth right now.
That's right.
The price is unknown for all of them. So again, why do I want to tell you that kind of stuff? So if a client asks you, what do you think about it? It's okay to say, nobody knows. it's good to know why nobody knows, because all of a sudden you're an expert. And it doesn't take that much. I don't know why, but I'm really feeling the teaching juices today here. Usually everybody that I'm talking to, the whole room's like 95%. I've been here 1,000 years. I'm not sure you're going to teach me anything, and I might just cut your leg off at the knee if you say something wrong. And I like that kind of challenge too. I'm up for that. I'm game on with that. I don't do kickboxing like that young lady did, but I can get kind of competitive when it comes to let's compare notes on stuff. But don't hesitate to ask me a question, or if I'm wrong on something, I'm the first one to want to know. Okay, and then community policing. I'm not going to get into the other part of it for today. Community policing, we have some problems in this country. They've been around for quite a while. I'm a big fan of policemen and firemen and firewomen and police and firemen. But within any organization, you can have bad actors that do stuff wrong, and when a cop murders somebody, that person should be sent to prison, period. I don't care what the police union says or anything else, okay? So, but what we do is we try something else. Let's change the community policing. And all of a sudden you have a Seattle situation, or a Portland situation, or a LA situation, or a San Francisco situation, or a New York City situation, and all of a sudden it's no fun to live there anymore. All of these social experiments out here, when I've mentioned to you, I saw one in 1981, and I saw another one in 2005. I'm looking at these right now, all at the same time. In addition to what's going on right now with what we're doing to Russia, nobody in the current economic era has ever taken a large country and blockaded them financially. Shut off the lights, turned off the electricity for their payment system. And usually what happens, or we'll find out that there's one or two American companies here that were heavily invested in Russia, that borrowed a lot of money from a local bank to do that. And so we'll just wait and see for that shoe to drop. But anyhow, these are the issues. These are the things that your investor clients are thinking about right now. Or at least they should be. The economy is white hot. As we sit here today, I don't think the economy has ever been more white hot than it is right now. I'll show you a few slides. Number one, there's 11 million jobs open in the country. People want to go, are my buildings going to fill up? They fill up when people get a job. 11 million jobs open right now. In addition to that, small business owners, 48% of them have jobs they can't even fill. Not just they're open, but we can't even fill them. Wages are going to go up a lot. That's good. Everything is good and bad. People say, how's the market? I'll say, depends on your point of view. Do you own a building or do you rent space, okay? What's good for one is always not so good for the other. Major corporations, look at this one, 77% of the big companies in America say they want to hire people. When that came out from the Business Roundtable, the third quarter number is 68%. They were, in their text of the news release, it said, never in the history of the roundtable surveys have we had 68% saying, I'm going to hire. And then the fourth quarter came out at a 77%. The U.S. economy is white hot. People are talking about how we might have a recession here coming up. I don't see it. I'm going to tell you this right now. I think I didn't mention this. I'm an economist, and that means that 50% of everything I say could be wrong. Okay? And we could have the whole economic staff of the Dallas Fed Houston branch in here. I've spoken at that branch 4 or 5 times. And they would be laughing at that and saying, quit talking about being 50-50, because we haven't been 50-50 for about the last 8 years. So just quit bragging. It's just what economists do. We're put on earth to make the weatherman look good. That is a true statement too. And has anybody ever heard of the AccuWeather or the weather? There was a weatherman, his name was Joe Bastardi. Okay, I'm at a national convention of farmland brokers and investors, and weather, that that vendor sells a lot of their service to farmers.
Oh.
And so Joe's sitting there right by the entrance to his booth with the Weather Channel or whatever it was. And I went up to him, I had a suit on, and I said, Joe, this is gonna be a stupid question, but can I get my picture taken with you? And he goes, fine, what do you do? And I said, I'm an economist, and I keep telling people if I ever wash out of economic forecasting, at least I can go into weather. And he goes, that's pretty funny. So I got my picture taken with Joe in front of the Weather Channel just for something to do. Americans have never been wealthier than they are today. This is the net worth of the American people. And by the way, I've given the company permission to distribute this whole deck to all of you. So you don't need to be taking pictures unless you want to confirm that this is the only suit I wear on presentation, which is actually kind of true right now. I don't let anybody know that besides y'all, so if I hear it from anybody, I'll know exactly where it came from. The net worth of the American people, look what's happened in the last 2 years. 110 trillion to 144 trillion. Can you imagine 144 trillion in worth of your neighbors? All of us. And people tell you they're worried about China, that China owns $1 trillion of our treasury bills or notes. And if we don't treat China really well, they could sell that $1 trillion of bonds and wreck our economy. I've been calling that out for about the last 6 years because that's petty cash to the American people. We could, if I was president for a week, before I got impeached, which would happen, and then I would quit and be happy to leave, I would just tell the Chinese government, just bring those back, sell them all, get your petty cash out, let's get these people off our backs so we never have to hear from them again. The wealth effect means, from the Federal Reserve standpoint, if people feel wealthy, they'll buy stuff. And so they look at this number and go, this is huge, bullish. This means that why people are willing to pay enormous sums for real estate of a variety of types, especially toys right now. Okay, you put up a property for sale that's on a beach in an irreplaceable spot, or in Austin, Texas, on an irreplaceable view, there is no limit to what that property might sell for, because the people that can afford to buy that, money means absolutely nothing to them anymore. Go back to that slide where I said things are different. Okay, the Federal Reserve has done this. This is what happens. You see what happens when your Federal Reserve comes in and lowers interest rates? Things start going up. Stocks and real estate start going up. And this is why Bernie Sanders can say he's a socialist and actually be a viable candidate for president. Because some people own real estate and own stocks, and a whole bunch of people don't own commercial real estate or a house or stocks, and they're not happy. It's called the wealth, not the income inequality, it's the wealth inequality. If you own commercial real estate of all kinds, and stocks, look what's happened to you. But if you don't, you haven't, and after a while, people get grouchy about that, and they change governments, and they change regimes, and they want to do wealth equalization measures, and that's what socialism is all about. And so if this was a group of the CEOs of the S&P 500 companies, I'd say, how many of y'all, men and women in this room, big fans of capitalism? Oh, yeah, you bet, count me in. I'd say, well, then you need to know that you're the biggest cause of concern for the future of capitalism, because you get paid $40 million a year to sell it all off at a loss or move all the jobs to Mexico. And all the people that you laid off in the communities they're from, they don't like you anymore. There's good news about this, because have you ever heard of Spanx? I should wear them, as you can see. I stopped at the donut shop between here and my home. You can tell it shows. But that lady that started Spanx sold her company to somebody for $1 billion or more, maybe a couple billion. And did you see the video when she announced that every employee in the company, she was giving them like a plane tickets for 2 to anywhere on earth basically, and a hotel and all of it valued at $135,000. You should have seen the screams of joy in that employee meeting when she announced that. And one of the big airlines, Delta or United, it was one of those two, announced a profit sharing deal too. We made a whole bunch of money, we're gonna split, we're gonna share it out with the employees. That's how you defeat socialism. You don't browbeat it down with talk about, you vote for me and I'm gonna fight everybody, by God, I'm gonna fight them all. That's all I hear as politicians is, vote for me and we'll fight, okay? You can fight till you cows come home. All you gotta do is share some profits. I sound like a communist, don't I? I sound like a socialist. But you know what? I'm the biggest proponent of capitalism on earth. I don't wanna lose it, and I know how you can lose it, and I see it happening. That's why I'm talking about it. This is super bullish too. All of these slides, if there was none of this chemical stuff going on that I mentioned earlier, I would say we are on fire. The debt service, that's just what you pay on your loans. As a percent of your income has never been lower. That means, in economics, demand means I want to buy something. Effective demand means I want to buy something and I can afford it. I think we could say right now today that the American people have never had as much effective demand in their pocket as they've ever had. This goes back to 1980. And one thing you can count on Americans, they do not tolerate deferred gratification. Nobody can outspend an American. That's our comparative advantage. When Americans got capacity to buy, they're going to buy. That's why I'm really bullish about the post-COVID economy here, because it's never been this way. It is unprecedented. Don't believe me, there's the chart. So I'm going to switch gears now. I've been addressing the issue of, are we going to have a recession? The likelihood is impossible in my mind, even though you hear it on places. So that was the first part of commercial real estate discussion is, are my buildings going to keep filling up because we're going to have continued growth in employment? So my answer, with 50% possibility of being correct, is we're not going to have a recession this year or next year. The second issue has to do with the value of my buildings and the cost of borrowing. Both of those issues are related to that word, inflation. Since 1982, inflation has been going down and down and down and down. And over the last 20 years, I've had all kinds of clients and Q&A meetings and stuff saying, interest rates got to go back up to normal at some point. No, they don't. Because there is no normal anymore. Because the Federal Reserve can make whatever normal they want. End of story. So you could have brought somebody in from Princeton or MIT, that's a community college back east. They got a good basketball program, but their economists aren't really very good. Okay? You could bring in somebody from MIT and they'd say, oh yeah, we're seeing a reversion to the mean anytime soon, meaning interest rates, average interest rate might be 5%. It's going to go back up from 1 to 5 just because it's average. When anybody ever tells you reversion to the mean, that means it's going to go back to average. What that tells you is, I don't know why it went down. I don't know why it goes up. But I can calculate an average really good. Okay? That's kind of part of the business. This is what we're in. How are we doing on time?
You're fine.
When do you want to?
Oh, I'm fine.
Okay,
They're gonna do a deal
I think we're
exchange.
kind of thinking 12:30 possibly.
Yeah, keep going.
Something like that. And if you got a closing or something you need to go to, by all means, I'm a finance professor. The time value of money means a lot to me. So as I'm looking at all of you out here, we're probably losing about $1 million a minute in gross domestic product by you sitting here. Nothing I'm going to say is worth that by a long shot. Anyhow, this is what's happening. It's just like World War I. People say, this is unprecedented, I've never seen it before. Well, that's because nobody's been alive when they had armistice in World War I. In World War I, the at that point in time, the soldiers were overseas fighting and they were getting paid and they couldn't buy anything. And the spouses were at home working in factories and they were getting paid and they couldn't buy anything. And it created all kinds of pent-up demand and there was nothing to buy. And when the war was over, people came out in the sunshine and just bought everything in sight, and you had huge recession for 3 or 4 years in a row, 17, 17, 15, and 15, and then you had a recession, right? And look what, down here, prices increased, in 4 years, prices of everything went up 80% over that period of time. Right now, we're looking at 7% inflation. This is a key, if you'll stay with me a second on this, because this is going to answer, this is my answer about why house prices are off the chart, why apartment buildings, industrial buildings, hotels, our prices are off the chart, and why I'm convinced they're going to go even higher between now and the next 5 to 10 years. Because one way you get inflation is when your government prints too much money. When they do it the first time, they printed money and gave away a couple $1 trillion during COVID. And most people saved it. They didn't need it, they saved it, okay? And so when you do that, it does put some bounce in your step when suddenly people got $2 trillion of cash they didn't have. But over the centuries, what happens is, each time a government does this, the efficacy of it goes down. It's like taking medicine. By the time the 5th time you take that medicine, it's working, but not very much. And finally, if you take too much, it has a negative impact. I think we're not there yet in America, but we're getting closer, because what happens is, when you hear people say, I'm worried about our government having a $30 trillion, our government has a debt of $30 trillion. How are they ever going to pay that off? I think we're getting close to that. And I think if President Biden came out tonight on the State of the Union and says, I've got a deal, we're going to print another $3.5 trillion because we're signing off on Build Back Better, I have a feeling that the stock market could go down rather than go up, because people say, we don't need kerosene on a bonfire already. But what happens is, I don't think we're there yet, but what happens is, I want you to see number 4 and number 5. Gold and Bitcoin prices skyrocket, and people withdraw their savings and buy hard assets. That's what the people in Russia are trying to do today. They are waiting in line to get their money out of a bank so they can buy something like 100 loaves of bread or something that has value other than the rubles that are in their account. You see, that's what's happening in Russia. But in my mind, people in America are withdrawing their savings and buying hard assets, and what that means is real estate for the most part. If you're a farmer, you take your money out of the bank and you buy a quarter section of land next to the one that you're farming already. Or you buy 5 combines. It doesn't matter, they're hard assets and not a dollar. I think this is the explanation of what's happened to real estate prices all across the board in every asset class. You don't hear people talking about this either, but you do hear people talking about how high prices are. Never seen it before. Why is this happening? We have a labor shortage in this country. That's going to cause wages to go up. And you know what? That's a good thing, because if you own apartments, it's great if your tenants are getting 5% pay bumps every year. That allows you to have room to raise rent in your apartment buildings. And so we've got labor strikes going on. And the John Deere strike, people say, well, this inflation is only going to last a year, so that it's going to go away. John Deere settled a contract last summer. It took me forever to find it. You think it's hard to find comps for commercial real estate? Try to find the details of a labor union settlement. It's about that hard. 6-year contract, 10% raise immediately with that $8,500 bonus, 5% pay raises in 23 and 25, and 3% raises in between those years. I counted that up, and it's about a 29% increase in wages over 6 years. That's inflationary. And that's not going to be over just a year. That's a 6-year projection. And maybe it's been a while since you've been in a labor economics class, but all you gotta know about that is if one union gets this kind of pay, every union across the country is gonna say, we can do that or better. We deserve it. And so wages are gonna go up. That's gonna be good for multifamily, but it's also gonna create higher inflation, which could make interest rates go up. That's logical. People are nodding their heads. That's logical. You would make an A in a PhD seminar in economics if you made that answer. But then you think back and go, Mark, you said inflation goes up, that might make interest rates go up. Oh, but then there's the Federal Reserve that says, we don't care. We can push a button and we can make the interest rates go down, and I don't care what the inflation rate is. You see why it's a game changer from an investment standpoint? Just because you might come to the conclusion I have that inflation's gonna be here for 4 or 5 years and interest rates are gonna go up and cap rates on real estate are gonna go up, you would make an E at a graduate seminar in economics with that, and you might make a huge investment mistake by not realizing that the Fed can your economics textbook, the Federal Reserve's got the magic button to override all of that textbook. That's why I'm not selling any commercial real estate. That's why if I moved to Houston tomorrow or San Antonio or Austin, I would buy a house now, even if you told me I've never seen them this high before. It's ridiculous. I'm gonna buy one because if you think they're high now, with mortgage rates at 4, what do you think the price will be when mortgage rates are 2.5 or 1.5? Over the next decade, I think it's highly possible that the 30-year fixed rate mortgage in the next 10 years could be as low as 0.5%. I know, and I mentioned this, hang on, don't forget, I'll be right with you. I mentioned this a couple of years ago to a group. I said, next recession we have, the mortgage rate will go down to 2. I was wrong. They didn't have to go that low. They turned the machine on, they lowered it from 375 down to 2.7, and the housing market and the real estate market blew through the roof. They didn't have to go any lower, but they sure could have. And they'll do the same thing again and again. Go ahead, sir.
So you just mentioned basically the algorithm of what's going to happen between the next 6 years using the John Deere deal. What I can't understand is why, how did the Fed Reserve come up with this ability?
With what? This ability to do this?
This ability.
Yeah, to do this.
To do it and the ramifications of that.
Yeah, his question is for the other side is how'd the Fed get this in the first place? How'd they get to do this? Congress kind of lets them loose. In a way, the Fed is supposed to be independent of Congress. Congress oversees them. Congress could shut them down with legislation if they wanted to, but they're independent.
So acts like Dodd-Frank, things like that?
Yeah, they have during Dodd-Frank, that regulated the banks. It didn't regulate the Fed at all. They're still day trading stocks. Okay? Yeah. So, just one second. The thing is, like I said, I can't dance, but I do like reading minutes of the Federal Reserve, and I read a lot of them, and I underline everything in there. I just did that. My wife goes, I think I'm kind of manic depressive. I didn't even know what that meant, but I can be really kind of over the top, happy, and then kind of not for a while. And she came home and I was over the top happy, and she goes, what have you been doing this afternoon? I said, I just finished reading a 22-page Federal Reserve thing that explains something to me. I was like, I am kind of freaking out right now. So that shows you what kind of personality I've got. But I read this kind of stuff because it matters and nobody else does because it's too boring. Yes, sir, go ahead.
Do you see the impact on 40-year mortgage loans?
40-year, going from 30 to 40 or from 30 to 100 really doesn't make much difference because the interest, you're still paying the 4% interest. And when you go from 30 to 100 years, the change in the principal amount really doesn't matter much. It's a good question, though. Okay. In addition to the inflationary aspects of the labor and the labor shortage. Yeah, go ahead.
Back to the Fed for a second. What about their stated goal of 2% inflation or 3% inflation?
Yeah.
Is that just a manipulated number they could put out? Or?
Well, they made that up as a goal, And what the deal is, it's been below 2% for about a decade. So they changed a little bit of the wording now to say on average 2%. So if you've been under 2% for a decade, you can be at 3% for the next decade and average 2. So that's another question that people don't get, is because, oh my gosh, inflation's over 2, so they're gonna start raising rates. Well, you just haven't read the footnotes.
Right.
Go ahead, Al.
Talking about the inflation. So right now we have the inflation, it's pretty much 7-10%, whatever.
Yeah, let's say 7 for now.
Well, yeah, exactly. And we were told after COVID that this will be transitory, and it's not, it doesn't seem that way. What's your take on that?
Okay, his question is, the Federal Reserve told people the inflation was gonna be transitory, meaning it was only gonna last for a year. And once COVID was done, everybody went on their vacation, we're gonna have inflation, and then it's gonna kind of go away again. I made that same mistake. I thought it was gonna be transitory too, because I figured as soon as people came back to work, the supply of hotels space would open up, the supply of lumber, everything would start to open up again, and you'd have more supply, and all of a sudden the prices start going back to normal. But what I missed was the labor deal. The one place I got totally blindsided was, I had no idea that people wouldn't come back to work. I had no idea that the labor shortage is this intense, that the United Auto Workers could get 29% pay bump over the next 6 years, and every other labor union's gonna get that. So this has migrated from a COVID temporary disruption of the supply chain into a much longer deal of, we don't have enough workers, and your government and mine, Republican and Democrat, will not solve immigration problems. After failing at it for 40 years, it doesn't matter if it's a Republican or Democrat, they will not create a good legal immigration system in this country, and we need workers bad, and they don't do it, and I've come to the conclusion they don't want to, because that's how they get reelected. These people have no interest whatsoever in creating a legal immigration system in this country. So why I say that is because it's a fact, they never do, including this current one. And so if they're never gonna fix it, we're never gonna have enough immigration in this country. So we're gonna have a permanent labor shortage. That's gonna be a part of the new rules, new reality. I'm worried about going to hotels this summer, because I've been in them, some of you have too. And you go to a hotel or a restaurant and they're skeleton staffed.
Yeah.
And so I hope they can stay open. I know they'll stay open, but whether they can provide the service needed for a huge increase in demand. This right here, this globalization issue matters to Houston in particular, and also everything up and down I-35. So if you have any interest in commercial real estate in that area, listen up for a minute about why things, I think over the next decade, this is gonna be slow change. But we have been living with no inflation since 1982, basically. That's 40 years. Because we've sent all of our work and our jobs elsewhere. In the 1980s, we sent all of our electronics to Japan. And then we sent everything to Mexico. And then we sent a bunch of the service jobs to India. And then we sent everything else to China. And every time you replace an American worker with a Chinese worker, the cost of production goes down. And so I could go to Best Buy. Last time I bought a TV, it wasn't a real big one. It was like $2,000 15 years ago. I go into Best Buy and that TV's in there, same size, for about 199 bucks. That's the beauty of shipping all of our jobs and our wealth to China, is we get cheap TVs. But that tide is turning. Go ahead.
I've been around long enough, I remember some of these things, and when I explain some of these things to people who are working with me, and when I mentioned something like the RTC, and they've never heard of it, and
Right.
have no understanding of how difficult things can get.
Right.
And they don't know what it is and what it was.
Yeah, well, it's good to know the history. I'm a fan of history. What's happening now is we're going to see the opposite. This has just happened in the last couple of years in my mind. Actually, last 5 or 10. I've been advocating for a buyer strike of everything made in China for a week. We don't have to have a war with China. It's just like the hotels in San Francisco that are dumping the Russian vodka in the street, saying we're not gonna buy Russian vodka, we're not gonna drink Russian vodka. If we had a buyer strike for a week, we wouldn't have to worry about China being at war with us because, well, I'm getting ahead of myself just a minute. I'll get to it. But things are moving away from China about as fast as it can. And so when it moved in there, it was deflationary. Now it's going to move out, and some of it's going to move back to the US, and that's going to cost a lot more money. But what that's going to do is it's also going to change the flow of goods across our country. This is kind of a big picture issue, but it's kind of fun to think about. And you're going to go, are you kidding me? You are a dork if you think this is fun. Okay, but the way it's set up now is when you buy something, it's made in China somewhere, and it gets on a boat and comes across the Pacific Ocean, and it lands in Long Beach in LA at the port. It gets off of there and goes by a train through Amarillo and then back to the Northeast where all the consumers are for the most part. When this switch happens, when that happened, it took a lot of traffic away from Mexico. So I-35 traffic was diminished, and all of a sudden Long Beach was the place to go. Well, now that reverses. After 40 years of that reverse is happening, and what that means is less is going to be made in China and come through Long Beach, and more is going to be made in Mexico and come up the NAFTA highway. So that's going to be the new trade route, which was the old trade route before China. So what that means is, think about something being made in Monterrey, Mexico, or somewhere else in there, coming up through El Paso, through Laredo, up I-35, across on I-10, north on I-35, and through I-40. Industrial real estate demand for industrial real estate is going to grow along that we'll call it the NAFTA trade route, and it's going to diminish on that China trade route. So if I could short something, I would short industrial warehouse in Long Beach and Inland Empire of California, and I would be buying stuff along the NAFTA corridor. This deal with China's star is fading fast. I'm going to talk kind of rough about China. I want you to know this, I love the Chinese people. We have lots of Chinese students. Up until 2 years ago, we had lots of Chinese students on campus, and my wife and I had a bunch of them over to our house occasionally for dinners. And a couple of those kids taught me and Luann how to play mahjong and actually speak Chinese with the numbers instead of one crack or one bam. They taught us how to say them and laugh because we never got it quite right. And at the end, Johnny goes, Mr. Dawson, this was really fun. This is just like playing mahjong in my home country. The only difference is we would all be smoking non-filtered cigarettes. And so I want you to know I love the Chinese people, but I do not love communist dictators, period. That's why I've been saying we ought to have a Chinese buyer strike for a while. But China has never been a trade partner for us. They've been a subcontractor. And when you've got a low-cost sub that's reliable, man, you're going to feed them everything. And that's what we did. And all of a sudden with COVID, they're no longer reliable because if they get like 5 COVID cases, they shut down a town of 10 million people. And if your shipment of whatever you need is on that boat, you're not getting it. They've migrated to an unreliable subcontractor, but this is way bigger than COVID because they are quickly morphing into our enemy. And all of you have had enough customer relation management courses to know it's not a good idea when your biggest customer views you as an enemy, and the whole Western world is viewing China as a potential enemy. And they are moving their production out of there as fast as possible. I can see why Tesla's got a big battery plant in China. I can see why iPhones are made in China. What I can't understand is that 25-year-old person that's really big on climate change and ESG investing and gets really excited because a sea turtle gets a plastic straw stuck in their nose and we're going to boycott plastic for the rest of our lives, and yet they'll keep buying iPhones made in China where they steal your intellectual property and don't respect your civil rights and put Muslims in concentration camps.
And they've got the
I don't
worst-
understand that at all. I would never own a Tesla, period. And I do own an iPhone. See, that's the thing. It's like, I'm saying by my ownership of an iPhone is the convenience of this thing outweighs any kind of moral bothering with human rights, all right? That's what the American people have been saying for the last 20 years. We like the cheap TV. We don't care what you do to your people over there. At some point, well, it's all changing. What happens? That stuff, the last time there was a big disruption in the China to the US trade routes, the Port of Houston grew like topsy.
Right.
It grew huge. It was the longshoremen strike. I was telling people 12, 15 years ago, everybody in Houston should send the Longshoremen's Union in Long Beach a thank you. It's like, we appreciate that. When y'all went on strike for like 2 months, the Port of Houston exploded right after that and been big ever since. And this deal is going to do the same thing. Stuff is going to be moved from China to other places, and that's going to be bullish for the Houston. And get a load of this just for fun. Some of you are excited about getting an electric vehicle and how we're going to go to all renewable energy and stuff like that. I think it's a good idea, but what you got to know is that communist dictator over there, whatever his name is, if he says you don't get one, you're not getting one.
That's right.
So we got to be real friendly with communist China, no matter how bad they treat their citizens, because let's see here, manganese. China produces 90% of that. That goes into batteries. Graphite, 70%. My dad was a golf pro. I didn't know nothing about graphite other than I want a graphite shaft in my driver, maybe get an extra 8 yards on my 190-yard tee shot. It's embarrassing to hit now. And then maybe you're more familiar with lithium. Lithium batteries. We're going to get lithium batteries for our leaf blowers and our lawnmowers and all that clean energy stuff. You'll get it as long as Xi Jinping or whatever it is. Yeah, I don't care. China. I saw this one. The cost of lithium's gone up 250% in the last 12 months. We're not hardly even making electric vehicles yet. What's going to happen when we start making millions of electric vehicles all over the earth? And China controls all the lithium. And then I saw this one down here. China currently dominates the battery processing market and is responsible for 80% of the global battery chemical refining capacity. 80%. Ford won't make an EV in this country unless China's dictator says it's okay with me. We're finding out exactly what happens when you are dependent on the Soviet Union for oil and gas. And people don't get it, but we're way more dependent on China for electronic vehicle stuff than Europe is on Russia for oil. Long term, super bullish on the I-35, I-10 corridors for distribution and warehouse going forward. Manufacturing is going to try to come back to the U.S. But who's going to, okay, so General Motors says, hey, we're going to build EVs. We got a deal. We cut a deal with Xi Jinping and had a mower play golf, and we got a deal. We're going to get battery juice, okay? Maybe. Ford and General Motors going to build computer chips. That's why it's hard to buy vehicles right now. But who's going to, with the labor shortage, who's going to do that? Those are nice headlines, aren't they?
Yeah, but there's automation.
My guess is, yes. My guess is these companies are going to try to come to the U.S. and they're not going to find the labor, and they're going to build them in Mexico. Okay? That's why I'm even more bullish on the NAFTA trade thing. I wouldn't be surprised if all three of these plants that are referred to in these two articles try to get placed in the US and end up in Mexico. So, because of all this, I've got about 6 slides left, and I'm gonna quit. An old economist told me over 20 years ago now, every economist should use the words "in conclusion" in their speech to give the audience hope. Okay. I'm getting close. That was my version of "in conclusion." Okay. Remember when I said when people get nervous about their government, they fly into hard assets to avoid inflation? I mean, okay, house prices were up 18% year over year. Farmland, Federal Reserve Bank of Chicago measures this. Farmland was up 22%. Commercial real estate, this comes from Green Street Economics, their all property index increased by 24%. And with prices like that, what's happened in transaction volume? Record high transaction volume. People can't get in fast enough. And I've had old clients telling me for the last decade, prices are too high, yields are too low, and people are piling in here, cannot get enough of it. And as long as our government continues to scare people, by that I mean hint that they will print money as long as they have to, they will come out and say, we're gonna have another Build Back Better thing, and we're gonna give everybody $3,000 again, just like they did. As long as the people all over the earth, it doesn't matter if it's just Americans, but investors all over the earth feel like there's a chance our government will do that, then they're gonna keep piling into real estate. Because there's only 2 things to invest your money in now. You used to be able to invest in bonds, and there's no yield there. So that leaves stocks and real estate. Some people say they're investing in Bitcoin. You do not invest in Bitcoin. It is not an investment. You can gamble in Bitcoin, knock yourself out. And because I've asked people this for 3 years, I've met people that made millions of dollars trading in Bitcoin. It's gambling and they got lucky.
Yeah.
But I'll ask them, what makes Bitcoin go up? I don't know. What makes Bitcoin go down? I don't know that either. That's gambling, okay? Go ahead, spin the wheel. But people that invest in, and the funny thing is pension funds are starting to do this. This is when things get really bad, is when major institutions get sucked into all this stuff and feel like they're out of step with the current generations. So I'm gonna do this. This NCRE property index, I just saw this the other day. I've never used this slide before, but I wanted y'all to see it. The quarterly, NCRE is kind of the trade association for pension funds. Let's just leave it at that. And pension funds own a ton of real estate. The total quarterly return was 6%. That's just in 3 months. And the total return for industrial, here's the different food groups. I put these in there for you. Industrial real estate kicked back a 13% return in 3 months. Apartments were at 6.8, and then hotels were at 4.6, and retail and office were at 2 and 1. Right now, as we sit here today, investors view industrial as the safest asset to invest in. And second after that is apartments. People are nervous about investing in office buildings because they don't know how many people are going to work from home. People have been nervous about investing in hotels. But that nervousness is over. I've heard that the value of hotels are now back up to where they were before COVID hit, and they're going to probably go up too, along with the daily rates. Retail, so retail and office, I would say the potential distress in hotel is pretty much gone from an investment standpoint, but office and retail are still questionable. Now what that means is people will still invest in it, but people can make some real money. When 95 out of 100 investors say, I don't want retail, I don't want office right now, I just don't know it well enough, that creates opportunities for people that know what they're doing to make money. because not every office is gonna be a bad one. Not every retail shopping center is gonna be a bad one. There's gonna be some bad ones in there, but there's gonna be some good ones, and people that don't do their homework won't buy any of it. And then you can come in and buy undervalued properties. So there's really some investment opportunities in retail and in office if you know what you're doing. See, that's where I don't know that. I wouldn't be able to tell you a good one from a bad one in office or retail or hotel. That's what your job is to become an expert. Look at every industrial building in your marketplace. Understand why there are good ones and why there are bad ones. People then rely on you as an expert. Okay, so I'm gonna close with this one, and then we could take a question or two if you like. I've got time whether you want to or not, we can decide. I'm totally comfortable with that. If you get a customer that says prices are too high and yields are too low, show them this slide. Because the biggest, CalPERS is one of maybe the biggest pension fund in America. It's the California teachers pension, firefighters, all those kind of people. 10 years ago, CalPERS was telling the state of California, you invest your money with us and we can earn 8% return. We'll get stocks, we'll get bonds, we'll get some real estate, we'll get you an 8% return, that way you can pay your retirees their pension. Since then, over the last 10 years, that has dropped to 7% as of last summer, and at that same time they said we're going to drop it again in August, which was a few months back now, to 6.8. So this is what I would show my seasoned investors that are complaining about how high the prices are and how low the yields are. It's like, I'm sorry, but the problem is you're living in the past. And this isn't the past. And that slide I showed you about how things are different because the Fed's manipulating the market, that explains a lot of it. And this explains to me why every 70-year-old that tells me I'm selling everything inside, I wouldn't buy anything at this price. CalPERS has got a 35-year-old portfolio manager in there for investing in commercial real estate in Southwest United States. And that man or woman will be right here in this market scooping up stuff. So with that said, I think that's enough for my prepared remarks. If you want to take time, let's do a few questions. And we'll shut down when the boss man says he's got the Mardi Gras beads on. So that's the chief.
Talk a little bit.
Hang on, go ahead.
So I was going to say, Mark, can you talk a little bit about what you think the impact of adding those canals was down in Panama?
Okay, widening the canals is, that would make it cheaper to take goods from China to around the corner.
Yep.
I'm not sure we're going to care about that in the future. I mean, look what we just did. I think China's going to be a lot better friend going forward because they just saw firsthand what happens when your big customers say, no dice, we're not working with you anymore.
Yep.
We could do that to China with a buyer strike.
Oh,
All
yeah.
we'd have to do is not buy for a week. They would close every factory there for a week because Walmart would say, don't build anything, don't ship me anything because, yeah. But the canal benefits Houston and a lot of the production that's going to come out of China could go to Vietnam or Indonesia or Malaysia or places like that. And yeah, that would make its way through the canal and up into Houston.
Yeah.
So,
The canal is managed by China.
the canal is managed by China?
Yeah, it was given by the Brits.
Well, okay. So then we'll decide how we manage that later. Just because you manage something now doesn't mean you manage it next week. I mean, when the gloves go to the floor, Country Boy Can't Survive, I think I mixed up two songs. When a good old boy goes bad. That's right, that's the other one. Yes, ma'am.
A question, you mentioned the I-10 corridor would be a good way to go in 35. What about 59 and 36 going all the way down to the border?
Yeah, okay, all of those highways are gonna see more trucks. My wife will say that's not a fun thing, okay? Because a lot of more traffic's gonna go 290 to 6 and head right through my town. So you see an industrial development along 290 right now. all of that, all of those highways, anything that a truck wants to come out of Mexico and end up in New York City. On the big picture of things, and whatever's the fastest and the cheapest way to go. And if I-10 gets too cluttered up and it's not fast enough, they'll go 35. If that gets clustered up too bad, then they'll take these other routes. And so, yeah, all of those. It's a great question. Yeah.
Now that the government is gonna stop quantitative easing, how is that gonna affect the stock and bond market on REITs?
Yeah. Okay. Okay. What his question is I mentioned how the Federal Reserve is engineering and manipulating the market. They have said that starting in March, they're going to stop manipulating the market. The buzzword for that is called quantitative easing. Okay? They're going to stop quantitative easing. What that means is we have been buying all the more, somebody would say, what kind of idiot would buy a 30-year mortgage at 2.9? Or a European would say, what kind of idiot would buy a German bond, 30-year bond with a 0.25% interest rate? The answer is no idiots would do that, but the European Central Bank will buy them all. And that's what our government, the Federal Reserve does. They print money and buy these rates, buy these bonds. So the question he's asking is, Mark, they're going to stop manipulating for a while. And we're going to find out in March what happens, okay? You would think on the face of it that if they stop manipulating the market with high inflation, interest rates ought to go up a lot. That would be what your first thought would be is. It's not happening. I tell you, there's something weird going on. I don't have the answer for it yet. I know how to make an A in my economics class, and my professor I know what that answer would be. But the fact of the matter is, the interest rates on 10-year treasuries should be going up pretty substantially, and they're not. Even with the government saying we're not going to manipulate anymore. So I'm going to tell you this, I don't know the answer to that right now. Because the only feasible answer why all the bond rates aren't going up, even when the Fed has stopped manipulating, why aren't they going up, means that we might be going to have a recession in the next year or so. And I just showed you the slides that how can you have a recession when people have so much money and so much pent-up demand? I don't believe it. But then people will turn around and say, okay, you showed me why you said the economy is white hot, and all of that is undeniable, but the 10-year treasury rate is not going up, even when the Fed is not manipulating it. What do you think about that? And that answer, I wish I knew for sure. I would tell you if I thought I knew with 50%, but now we're way down in the 20% efficacy range. It's a great question. I don't know the answer. Trust me, I'm thinking about it every day, talking to people that know stuff every day, and nobody knows. Yeah. All I do know is if rates go up too high, here's what I know for a fact. Mortgage rates have gone from 2.7 to 4. If the 30-year fixed rate mortgage goes from 4 to 5, and all of a sudden the housing market just kind of shuts down, that will be the beginning of new quantitative easing. It's like, okay, the 30-year mortgage got up to 5, it's wrecking the housing market. We're going to turn the machines back on and get that mortgage rate way back down low again. That I feel 100% confident in. So rates could try to go up. They have gone up some. They could try to go up more. But if they go up too much, that's when the machine turns back on and boom, back down we go again. And that's why I wouldn't sell any commercial real estate right now, because you might think, I'm going to sell at the peak right now. Because when interest rates go up, commercial real estate might go down. I'm going to sell now and wait later on. But when they turn the machines back on and interest rates go even lower, 5 years from now, those buildings are going to be worth a lot more than they are today. So I'm not selling any commercial real estate, although a lot of guys and gals I know are.
How about residential?
Pardon me?
How about residential?
Houses are great. I tell people, if you don't understand commercial real estate, the best investment you can make is just buying a single family home right next to the one you own. Because you know the market and the values are there and we can't build enough of them. So yeah, I'm super bullish on that. In fact, my wife and I just started buying single family homes a year ago. She's a good property manager, I'm not. I said, if it's up to me, we won't buy any because I'm an absolute failure at this. She goes, I'll do it. And I said, okay. So she's the CEO, she runs it all, 4 houses. I don't do anything. I was the chief financial officer. I put the money in, she's running it. I told her the other day, she said, what do you think about this? Do you think this would be okay? And I said, look, here's my decision criteria. As long as you think this is fun and you're enjoying it, I'm in. The day that you find out this isn't fun and you're not enjoying it, all 4 houses go on the market and we'll sell them within 3 months. Took a lot of pressure off her. It's like, okay, good. Well, still fun, I'm in. Was there one last question? Go ahead.
Do you see single family as a commercial asset class now with all these institutions line up a bunch of single family in these build-to-rent communities? I mean, we're seeing them buy like at a 2.75% cap rate on some of our listings. They're coming in from all over. And
Yeah.
primarily Texas, from what I've read and seen, is like the market where these build-to-rent communities are popping up.
Yeah, his question is, single-family houses have become commercial real estate. And so if you're a brand new person that, let's say you're here today and you're in residential and you're thinking about getting in commercial, you might get into it and somebody would start talking to you about buying houses for an investment. Up until the last 2 years, you might have a response like, I don't do residential anymore, I'm in commercial. That is not a good answer now, because single family for rent is now a category of commercial real estate investment and billions of dollars are going into it. So when you put up your shingle and you're in commercial real estate and somebody wants to talk to you about investing in single family homes, don't say, well, we got a residential division, I can refer you for that, because that person could be a significant commercial real estate investor making a choice to buy a boatload of single family instead of industrial or hotels or anything else. Listen, I thank you for your kind attention and I hope you have a great year ahead, and thanks for inviting me to be a part of it.